Hello, everyone, and welcome to another episode of Majlis and Markets. As always, I am your host, Hassan Jivraj. I'm really happy to be doing another episode on YouTube. And don't forget, this will also be on audio platforms as well shortly after. And please, before we begin the episode, remember to like, share, and subscribe to this podcast. But now I'd like to introduce my guest for this episode, none other than Ijlal Alvi. Ijlal, welcome to Majlis and Markets.
Assalamu alaikum.
Walaikum salam. Ijlal, it's really a pleasure to have you on here. I should have said in the introduction, you're also the CEO, I think, of the International Islamic Financial Market. Is that correct?
Yeah, absolutely.
So, Ijlal, you've got a really fascinating background. I've known you for a number of years. Your organization is very well known in the Islamic finance world, and it's very well known also in the region. And you do a lot of interesting work and important work, I would say, as well. And your publications as well have been very helpful to me in my journalism days. But the thing is, I think a lot of people outside of the Islamic finance industry don't really know too much about you. And even those within the Islamic finance industry don't know too much about IIFM and what they actually do. So I guess to begin with, could you give us your early life and your background story?
Yeah, sure. First, thank you very much for inviting me. It's indeed a pleasure meeting you virtually after a few months. So it's my pleasure and I'm honored. Looking at from my early life education, I did from US, both my master's and my bachelor's. And then I moved on towards, and it was specific to finance. So that's the area which I liked during my early days of education. And then something which I, in the early life, wanted to start somewhere on the banking side, which I did. Started from UAE. My earlier work, alhamdulillah, is quite diversified. My initial, days when I started, and I had a lot of hair at that time, was in the investment banking, specifically in the mergers and acquisitions, buyout securities. And those securities, if just for, brief info, had, a lot of variations also, like what we see in Islamic in terms of some sukuks and all. But they had, at that time when I started, the market of the, that's junk bond, what is called, or high yield debt, was basically a starting point at that time. And we had a lot of, interesting structures there, which was increasing rate, notes there. There used to be reset notes. There used to be, fully collateralized, transactions also, which still some of them exist. So from there, I moved on to bank restructuring for a little while, briefly. And then what you have now, the Mashriq Bank, that's where I was. And then I moved on to Deutsche Bank. And that's where I basically, my passion, which I thought I will continue for a longer period, but alhamdulillah, then we moved, was basically in the treasury side, first the fixed income, and then also in the, foreign exchange side. And we were on the, market maker bank, being a bigger bank. And my last assignment with Deutsche would have been head of global markets Vietnam. So I was moving from Far East towards there. And that's when I decided, and there were some, openings to centralize treasury, and I ended up in Bahrain. So this was in, late 90s. And then since then, it's been basically, I've been based here, and, looking at, how Islamic finance, my exposure to Islamic finance, alhamdulillah, has been since, late 90s. When I first, did some transactions, which were, at that time, still we see Murabaha use, but, generally at that time also, this was the starting point for syndicated transactions. And that's where I started. And then my sort of progression was covering, Islamic institutions, entities like Islamic Development Bank, those transactions. So it's been, a while since I've been, exposed more practically. Of course, my training in terms of, banking side was in Deutsche, where we had a lot of courses and all, but it's more looking at the practical stuff, which I have been always involved. And, so this is my sort of, on the banking background side. Then looking at, life before IFM, that's what, I was active sort of in terms of heading the treasury. I was active, and I sort of, that work itself is pretty exciting. People who are familiar, they will know, because treasury controls, a lot of activity. So you take the risk also, but you have to also manage. That is something important. View the market, how you see the economics, how you see various aspects. So there's a lot of things which keep you exciting in treasury. Then, it came to IFM, and that's, alhamdulillah, it's been a while, in 2005. early 2005. I joined, and it was basically, they were looking for somebody to see IFM, what it should do. Started, but actual sometimes these kind of development institutions or infrastructure institutions like IFM, we need to have a very clear, in my view, I can say, you have to have a clear sort of view what you need to do. You have to see clearly how you will achieve it, what is sort of, things you want to do, what value addition you will do. And naturally, when you have entities as a standard setting, you don't duplicate efforts with others. So that is also important aspect which one has to see when you are doing it, and how you sort of develop in terms of bringing others on the platform, the consultation phase, which is very important, coordination on that, and then your overall development process, which we have established to put together a standard, because it's a whole comprehensive exercise. And that's where, my sort of
Amazing, amazing. Ijlal, before we get into IFM and like what you do on a day-to-day basis and what IFM does, when did you first hear about Islamic finance? You know, you've had this illustrious career in banking, conventional banking with Deutsche and some of the other places, and you did some other stuff. But when did you first hear about Islamic finance?
That's like I said in 1998. So it's been quite a long while. And it's basically doing some transactions in terms of more syndicated transactions and, for financing for even sovereign level also, or, quasi-sovereign entities. So those kind of, transactions was my first exposure. And then later on, exposure was, bank facilities. You have trade finance facilities also, which you need to sort of undertake in Islamic. So it was more sort of, my focus was moved more from, of course, from the treasury towards, more on the financing side, and then more towards syndicated financing, more bank, facilities, lines in terms of, so focus was predominantly moved towards Islamic. So at that time, as you see, though, when I started my career, why Islamic Bank, IDB was still there. Of course, they were there for much longer than, my initial start. But they were sort of, I was aware that they exist. I was aware, generally what they do. But Islamic finance, what we see now, naturally, it has made a lot of progression, as we have seen. A lot of, development has taken place, a lot of things, which are, we have seen how, it has developed as a financial system. That's our industry. That's something which initially was, some things were more on the, certain smaller level, I would say, in those days. And then it's really picked up what we see, especially. It started with the banking side, of course, Islamic finance, as we all know. But then you see the Sukuk emergence in early 2000 or 2001. That's when you basically see also the capital market side developing. Before that, it was more sort of, pure banking, very pure vanilla type of banking facilities and all. I think that was the main sort of focus initially.
Great. And Ijlal, you said you came to the region in the... Was that in the UAE or was that in Bahrain? Where were you at that time?
Initial start of my career was early 90s, and it was in Dubai. And then I moved to Pakistan with Deutsche, then Far East and Deutsche, and then.
And how would you say Dubai and Bahrain are different today compared to when they were when you first came?
Yeah, that time, Bahrain always been a hub. And I remember, at that time when I joined, and it was initially part of my career, I just graduated and all, came back, to the region from US. Sort of, one of the main sort of conferences in terms of the, investment banking type conferences and big, used to be in Bahrain. So my first entry in Bahrain was from a bank attending a big conference here. So that was, I've seen. So Bahrain has taken a leading role in terms of hub. So now what
And
we
that was
see.
before DIFC, right? That was before DIFC.
Yeah, before that, yeah.
So Bahrain at that time when you were there was a banking center for the region, right?
Yes, we didn't have the IFC, we didn't have all that. So Bahrain was the main focus, and any bigger event used to be, here. But now you see other jurisdictions are also taking place, and also market has evolved, or jurisdictions have evolved.
Great. And Ijlal, before we get into IIFM, what do you do as as the CEO of this organization? What do you do on a day-to-day basis?
And there are a lot of, see, that's what kept me, also, and thankful to the board also for, keeping faith with me and also our team for a long time, because we sort of, I look at wide range of activities. It's something which we sort of do, which keep you exciting also, assessment of any new sort of initiative, because that takes time. Sometimes we do consultation exercise in that before even any decision is made. Sometimes you may sort of look at, let's say, ESG could be something. We may do some assessment on, carbon credits kind of, initiatives, which could be, eventually they may come. It takes time. Not all of them come, into fruition, but we see quite a number of them happening. So that is sort of one element. Then you have, generally, the standards, which are basically coordination on those, working on those, working with the working group. Also in the Sharia process, so we have, our Sharia Dr. Ahmed would also take part in that process, looking overall, sort of keeping track of the market, especially the Sukuk, as we have the Sukuk report also, so a bit of research on that side, keeping you updated on the activities. We also have training also, which, I'm also part of the panels generally and the workshops and training. And then we have, often we organize some round tables or we do jointly. So these are sort of a number of things which, in this kind of organization, being a development organization, you intend to work on. So it's always something which you look at, something new in that respect. So you move on, and then existing also, there are sort of things which you have to keep you updated, yourself updated also.
Amazing, amazing. Jalal, if we talk about IIFM, you've talked a little bit about like what it does, but from somebody who doesn't know about Islamic finance, let alone IIFM, how would you characterize its mandate? Like, what is it trying to do, and how does it play a role in the ecosystem, the Islamic finance ecosystem?
Very good question. Because this used to be, some years back, often used to be asked, but now, alhamdulillah, it's much clarity is there generally. Even, in a newer jurisdiction, even from Africa region and all, generally it is there. And our main sort of thing, which we sort of looked at it when we started, what sort of should be the main focus. What should be, I should do. You have, of course, AOFI, which we all know, your Sharia standard, you have governance standards, you have accounting, auditing standards, you have IFSB, more on the regulatory side, so they are there. What, through consultation emerged at that time was, there were no standardized documentation of products. And when we talk about standardized of documentation and products, you look at the wholesale market, cross-border in particular, but you also look at even, national level could be also, they can play a role. So that's where we sort of looked at it. Even now you see a common contract like murabaha or commodity murabaha, or if we have Tawarruq, not the organized one, but generally for financing, which is being used, was not really standardized. So that was to be, every time institutions, when they sort of want to new line, they want to have new counterparty to be added, they have to go through the whole process again. Although there could be some few changes from credit aspect to operational or maybe Sharia, but generally it was not in a standardized form. So what you had was more bespoke, and bigger bank, of course, they have. So what you sort of was lacking was one standardized document, which basically provide to the counterparties a fairness. So, and other thing is creation of transparency, what you have sort of how they're developed, what are the bases and all. Generally, of course, bespoke documents are also very good. I'm not saying that, it is something which, is always very helpful and continue to do so. But in terms of standards, that's sort of things you sort of produce, which basically, main things which needs to be put in place are there. So have to look, of course, the Sharia side, we look at it, but also look at, what kind of a governing law would be, how contract enforceability will work in for certain, jurisdiction. And this could be, governing law could be, Sharia is what we look at, it's more in the mechanism because it's not codified, right? So what we have the Sharia, but that's the main sort of basis for Sharia is the paramount, of course. So these are sort of things which from IFM we have managed to now, it's very clear to most of, I did a webinar, trade finance related about a few weeks ago, and they were mostly for US and European, institutions and all. So we clarified a lot of things and there was good interest. So we are sort of, trying our best, and we are from IFM is very focused and very clear that this is unless board decide to add some more things, which should be the case, and that should come in place.
You mentioned about the agreements. What would you say, from your perspective, during your time at IFM, has been the biggest achievements of this organization?
I think the main thing is putting together the standardized document, and then also development of a hedging segment. Previously, if you look at normal derivatives, differentiation from hedging perspective, of course, you need to hedge the currency risk, which is there. That is what develop. You need to have a first in place in main master agreement, which basically covers the counterparty risk elements, how that will work, what kind of sort of general sort of terms and conditions, and how in case of any event, which could be default events or other events also, let the exchange, what would be the case of mechanism. So I think the sort of development of the hedging master agreement was, I think, something which took us 4 years. Or generally, we can complete some standard even 6 months to 1 year. At that time, and given the mechanism which is still is widely accepted and used, was something we achieved. I think other standard, of course, all are very good. I always find it very sort of we try to promote. As well as from the hedging also we promote, but not only promote, but that's the use. What we are saying is we are not promoting for the sake of just, but it's importance of what it is there. And how, we have clarified the unrestricted wakala work. That's a very specific to Islamic finance, and it has, as we very well know, then when you have a contract like agency, which is wakala, you don't have any guarantees. Cannot do that. So neither principal nor your profit. But there are features which are built in, which provides, additional sort of comfort or additional, robustness, I would say, to the, a party, which is, say investor, for example. But at the same time, it works well for the party which is, also taking the funds for liquidity management. Sukuk documentation, which works a little differently because you are different, more than 2 counterparties in Sukuk. So those standards we have on Ijara. We have also seen, developed and also seen an increasing use for risk participation on the trade finance side, unfunded and funded. So these are all, I think, what we have done has really helped the market to move towards common standards, move towards unification and various jurisdictions. And that's how, when you provide that, the advantage of having a standard is it's helped the industry to further develop. It helped the industry to sort of work in a robust manner, in a unified manner, and it's provide the reference point also for the institutions or new entrants also to refer to what it is there. So I think that's I hope I answer your question.
Sitting in this organization in Bahrain, how difficult has it been to get harmonization? I asked brother Omar Ansari on a podcast recently, or actually 6 months ago, about harmonization across jurisdictions. Are you guys finding that a bit of a challenge as well with regards to your standards?
I think from our perspective, what we sort of have done is looking at the general standard, what AOFI do and all. That's one difference. But we have our Sharia board, which consists of very experienced scholars. They are sort of, in terms of all scholars are of course knowledgeable, but if you have scholars which, have seniority and have seen, how, what is really sort of, and come to interpretation when it comes, that's come to ijtihad, a common ground is important. We also when we develop in certain cases we have to have C, because your general standard we can refer to AOFI, we can refer to FIC Academy also standards which we do, and those are covered in the footnotes. But there are some aspects when you come to actual documentation that could cover the Sharia aspect, it covers the market aspect, covers the credit aspect, operational assets. So documentation covers wide range of sort of things, which of course govern, and paramount is the Sharia. When we develop standards, what we do that is looking at the market consultation and the working group. So we get that feedback also from various jurisdictions, also from their Sharia, also what are the things before we go to our own Sharia, which is the one which basically is the approving authority in terms of standards. So pronouncements is of course from our Sharia board. This is how I think we sort of, have come, sort of overcome the challenges. Always there are some, but if you see how the usage is there, how you see, which we have clarified also, that your financing murabaha, if in case it is used in the hedging, it's differ how muraba for hedging works. So that's totally different. And that we cover in detail. Of course, today I won't be able to go into details. We do it in our workshops and all. But those are sort of differences one would have to see, which our Sharia board also see. So starting point, of course, is always is your see if there is a red line which you cannot cross. So those activities naturally, or those kind of products or documentation, we may not total look at it. We may do initial assessment, but if there is room for further, looking at further research, for ijtihad, trying to see what is best possible, then there is always chance that something can be developed which can help your market.
Like in the Gulf, for example, do you see like a big discrepancy between adoption in the Gulf and in other parts of the Middle East and say Southeast Asia, Malaysia? Or do you think like it just depends on like the standard and the regulator?
I see, I don't see, sometimes it depends upon the jurisdiction. That's true. But generally, I've seen that it is basically, generally intend to adopt our standards. Even in Malaysia, sometimes you have jurisdictional documentation, and some jurisdiction may be more domestic. So they may have a domestic, but then if you look at the international quality standards, we always have international law firm, which we do as a external counsel. Their job is not like a consultant, but just to make sure that what the comments from industry is received, they're incorporated, and then also work with the Sharia, explaining, especially the legal related clauses and all. So we generally, what we have seen is it's really, barring few, it works over the period. When initially, naturally, when it started, when you have sort of these standards, in our case, mostly it is voluntary. In any case, in few jurisdictions you may have mandatory implementation. I think mandatory is also works, but there are some challenges in those cases. So it's more voluntary. We have seen the use, quite widely. Even in smaller jurisdictions, often, we tend to meet and explain if, in certain cases, as industry grows on certain requirements, like especially, in terms of risk mitigation or controlling the risk for hedging purposes, is very important also. That previously it was not really considered that important, I think, initially in industry. But as we've seen, now you see the volumes also have increased. We have standards which cover the regulatory element of variation margin for, putting the margin, these are over-the-counter transactions, foreign exchange forward, or your profit rate swap, which is fixed to floating, or your currency. These are the three main as of now, which are required by the industry. So these are not, traded exchange clear transactions. These are over the counter. And for that, naturally, there is a variation margin requirement. Then what you have also is the margin actual, which is also required, which require higher volume. And what we see now, in terms of consultation, the volumes, generally margin sort of requirements from regulatory perspective comes from regulator is when volumes or institution reaches like $50 million. And in some cases now we see the feedback we receive that, some banks are reaching that level. So you can see, in terms of requirement and some need, we have seen, for example, how, the rates used to be very low up till 2022. Or 2021, and then they moved very quickly, and then naturally they realized that you need to sort of hedge that. Previously, for many years, the industry was generally used to a very low rates, but then the whole sort of scenario market adjusted, to a new rate. Now you have again, I don't know whether they will move to same levels. Naturally, now there's some easing. In terms of, rates for different currencies, especially hard currencies. So these are sort of things which, which I found it to something which we have seen, how the progression has taken place. Yeah.
Ijlal, one thing I wanted to ask you, I asked Omar this as well on the podcast, is like, why should we care about harmonization and standardization? Why should the market practitioners care about whether something is harmonized or not, or standardized?
Like I said, it is important because if you have, clear sort of a reference point, a reference document, which you can also use, which it helps the industry to develop. Not that we are developing the industry, in a speculative manner, in a manner which is basically going away from the Sharia principle. No. But if you have what we have seen, if you see in the conventional side, and we have, I have, privileged to have, honor to have signed several MOUs, quite a number of them. Some, as you see, we do jointly. In being technical, how it's developed with IIFM from a governing law perspective, it helped the industry, it helped the institutions. And I've seen, if you see, looking at, just from the standard point of view, with Islamic conventional, their role is important. How, it's in terms of development of the industry in a sort of robust manner, in a controlled manner, in terms of creating more transparency. These are the key elements. And of course, I know fairness. So you have to have fairness for both counterparty, whether the counterparty is a large institution or it's a smaller one. We have, various jurisdictions are joining. So these are the, I think, main, in my view. I don't know what Brother Umar said. My sort of view is this in this regard. So they help. That's why if these standards have been looked at, they have been referred, because they help them to see. Because generally, institution, they have their own internal approval process. Each institution will have that. They go through that. But it makes it much easier their life. Even scholars, they find it easier that, okay, if it comes, we know that some of them may be, part of our board or AOF, but they know that, yeah, it is basically they've seen that. Makes your sort of negotiation time also much easier. You're sort of trying to, even a smaller contract I mentioned earlier, the Murabaha, used to take a lot more time. But now your negotiation time, you can sort of move on much quickly, in terms of actual, transaction level.
So, Ijlal, one thing I wanted to ask you was also about liquidity. Obviously you're very familiar with the liquidity issues in IFIs. We had brother Mohammed Safri on a few months ago. Obviously, we talked to Omar Ansari as well, and other people in the practitioners in the Islamic finance industry. But one thing I wanted to ask you, like on a personal level, or like from your experience as well, is why do you think a lot of people in the industry, or people, skeptics, or people who criticize the Islamic finance industry, don't like Tawarruq or don't like commodity murabaha? What do you think the issue is there?
Yeah, I think in terms of the Tawarruq, of course, as a, what we see widely, or if it is not organized, it is done as an instrument with, two counterparties and, separate brokers, and each has their role. That is something which works. What the issue is in terms of over-reliance, in terms of the Muraba, I think that's where the issue is. Because in some cases, you don't have really availability of assets. Like I mentioned, even unrestricted wakala, and it could be, on balance sheet if you do the assessment, what we have. But what you require, when we talk to any new jurisdiction, it doesn't have any Islamic yet. There are quite a few, as you know, especially from the Africa region also. They will not have the assets to basically put that sort of arrangement in place. So that's one, I think, the critical aspects. That's why they generally have to move to the Murabaha. So my view is that first we need to really work towards really looking at sort of alternative, how to make best use of them and how to reduce the over-reliance. So that's where, and it's credit intensive. So generally, yeah, that's also a preference for some institutions. So these are the main sort of things, because if you see, in a country like Pakistan, which wants to, and working on to transform to Islamic, the challenge would be definitely the assets, whether you'll have underlying assets to put together. Even if you do the mudarba, you will require assets, and the Islamic assets, how their availability. So it's overall sort of as a progression. So you have to, what we have seen is start from somewhere and then develop it in a level. You may see, even from Malaysia, certain contracts and all, initially they did. And as the industry progress, you don't see them. So that's how, Sharia wise, they were fine. From there, reputation, we are not really questioning that. That's, but you can move to, sort of arrangement which is more, can be widely acceptable also in some cases, and sort of are, so that's, I think that my view is on this point is that we sort of, like, in terms of, the instrument, like I mentioned, we have, for example, collateralized structure based on, again, if you do a collateralized, you cannot bring a equity type contract. So these are also things one has to be mindful that when you are doing, these sort of contracts, sometimes you have to rely on particular contract. It could be a debt type contract. It could be, in some cases, Chara, which is fine. So these are, I think, some of the things which as we go along, I think further improvement will come.
I mean, one of the things people have mentioned to me whenever they criticize about Islamic finance is that Tawarruq is very similar to a conventional loan. It's a quasi, it's basically very similar, and that the banks are basically using replications of existing models and not really doing like anything that's different out there. I mean, how would you respond to somebody like that who thinks that these are just quasi, conventional replications?
See, but because there are, like I said, you do a murabaha, there is a requirement, Sharia requirements. Where I said the organized tawarruk is the issue, where one entity is doing all the functions, all the paperwork, all the transactions, buying, selling, commodity. I think that's where the main issue is. Otherwise, if you are sort of doing as prescribed by Sharia, then it is basically something which is there, that is approved. It's basically honorable scholars, I'm sure. I mean, and they know this, and when they're approving, they know better than exactly for me also, and that's what they see, that what kind of a process you have, what is the objective. So you are here, what's the purpose is financing, what they are trying to raise. So that's where I see, that you do it in a prescribed manner, which is prescribed by AOFI also. If you look at International Academy ruling more on the organized tabarruk. So that's where the issue is. Then sometimes, the institution level, there could be, certain things which from the credit perspective and all, they sort of have to work it out, or for the operational also. So that also sometimes can play a role. Like if you see Rehen is a pledge mechanism. So you don't have a title transfer. But in some cases, it could be. I'm not, saying that it is happening. That for, particular institution, the credit perspective, they might, have to go through that title transfer and work it out. It could be a separate arrangement, different ways to do it, without, sort of, what is the Sharia ruling has to be by. So that is something which I see.
One thing I wanted to ask you also, just on this issue of liquidity, is that why do you think a lot of jurisdictions don't issue enough money market sukuk or any kind of like repo for the banks? Because we've been seeing this recently in countries like Saudi Arabia, they issued, or the UAE, for example, they only issued short-term liquidity instruments for Islamic financial institutions. Why do you think a lot of countries are not doing this quickly enough?
Again, I think it's basically putting to the infrastructure in place. Also, what kind of assets they are going to use, that is there. Also, your regulations to be there also in place. So that is important. What kind of regulation you have, if it is title transfer, or generally if it is a security interest creation, or the pledge mechanism, then how efficient is your sort of legal system to support that. That's what generally institutions, counterparty, they look for that, especially the larger one, to protect their sort of risk, right? And what we see also, in terms of course, risk sharing is something which, in Islamic finance we promote. But in some cases, you need to have also, for risk mitigation, risk transfer also, in some cases. That is also some time when I has to do it.
One thing I wanted to ask you, I didn't ask Brother Omar this, hopefully on another podcast I'll ask him, is that this idea of benchmarks Islamic financial institutions like the banks use, do you think that it is time now that we have a reform of these kind of benchmarks, for example, for pricing products or for like the way we structure contracts? Do you think we need to create our own one, or do you think we still are going to have to use the existing conventional ones?
Again, that's a very good question. And from my side, I mean, we are looking at it for the last, 15 years or so. There have been some roundtables on that. That's, I think, the role one has to see is key element would be, regulators. And, when you develop a benchmark Islamic, how you do it, and it should not really, I think, regulatory perspective, create any arbitrage. So you cannot have two different rates. It could be less, so that will be disadvantage, or it could be more. So that would be something which, credit element comes to play. So, overall, I think the challenges is also something to do, although we have seen now even from, AOFI also, they looked at this and different economic models and all. But it has to be worked out, with the regulators and trying to see how they can manage, that. You cannot have a single currency, two different rates. That's something one has to see. And other thing is, which in my view is important, is basically the size of the industry. Still, we are reaching 4-5 billion trillions, but you need to have, I think, bigger size. So eventually, inshallah, we'll get there. And then you have to see basically what, if you are using any economic model, then how it will reflect in terms of the rate. Previously, there were some attempts made, which was Murahaba rate quoted by, Islamic banks was, tried. It came to IIFM also, but we, at that time also said that something, maybe more work need to be done, more consultation need to be done. So we looked at it, but we sort of were not part of that. But we always support these from IIFM. So in my view, I think is that as the industry progression takes place, the size increases and you have more volumes, probably something can be worked out. But to my sort of humble opinion, my opinion is, as of now, I don't see happening yet. Some jurisdiction level, you might be able to do it as a model, but then you have to see that yes, jurisdiction is basically what kind of is it a purely domestic market or, Islamic banking, or it is cross-border. When you come to cross-border, you will and basically has to cover that element. Examples can be developed for a particular country. Like for example, Sudan at one time, we've seen way that, things improve there. But, it's basically, I think we have to see if it is domestic level, just for domestic, possible. But you cannot bring that to sort of a standard level, in my view. That has to be, if it is a cross-border, then, different elements challenges come into play, different factors.
Yeah, I was gonna say in the UK, for example, obviously the Islamic finance industry is not that big here compared to, say, Bahrain.
Yes.
But one thing I wanted to say is, like, I have an Islamic fixed term deposit account with an Islamic bank here in the UK, and I put in, say, £25,000 or $25,000, and they say to me, "Oh, the expected," it's a Wakala deposit account, so they say to me, "Oh, Hassan, your expected return rate is 5% over 12 months." So I say, fine. And they say to me, "We've never missed a profit payment. We've always delivered what we say we're expecting." They don't say guarantee they're expecting.
Of course.
But when they say, "Oh, we don't think we're going to make this profit payment or reach this level, we'll give you back your principal and whatever you've made in return." So in reality, are you taking a risk on as an investor? Because it seems like a depositor, you're just putting money into the bank and you're still insulated by banking regulations.
See, that's a good point, what you mentioned. That's something naturally, initially also I mentioned earlier, that you cannot guarantee, the rate of return or principal in case of Wakala. But how we develop the unrestricted, if you look at it, that if it's expected rate. So in Mudaraba, I think if I may say, what is it? It is basically profit sharing percentage. So Mudaraba generally, it's not very straightforward if you look at, in terms of what profit sharing, 10, 90, what of what. So Wakala is better that you have this expected rate. You cannot, of course, guarantee that. And then you basically can build that what your portfolio is producing, what kind of rate you are basically doing, in our case, in our unrestricted Wakala. And then Wakil is liable to inform if he is not going to meet that rate. So the investor basically can decide whether he want to continue, or Wakil may say that, there is some loss also. Because we earlier, if you recall, I think 2000 financial crisis time, 2008, there was a court case in UK about the, unrestricted Wakala. Standard was not there at that time. It came in 2013. And we clarified a lot of things. These are the advantage of having a standard documentation. And then at that time, UK court said that, okay, we don't understand how unexpected Wakala, profit element work. But we are basically very certain that, the bank basically have to return the principal. You cannot just say that everything is non-compliant and all, sometimes you make that excuse. So that was very clear ruling. So we have this, we are very right that, you cannot guarantee, but then you take that risk that, generally bank is saying that I'm sort of need that my portfolio produce that. In some cases, it's recommended via Sharia also that you have, some kind of business feasibility also. If institution level, I'm talking about not at the retail level, the banks may want to share it or also discuss and see. Those are all possibilities. So these are, I think, things which are helpful in terms of, having a Islamic, pure element there, and then, making sure your rate of return also is reasonable, what you're getting.
Yeah, I've always said to people who criticize Islamic finance is that they're having also to adhere to central bank regulations in a fiat-based, riba-based system. They're still having to they have all these Sharia considerations, but at the same time they're having to adhere to central bank or like the regulators'
Yeah.
regulations, right?
Yeah, when Brilliant did the facility, we looked at it, we discussed with them also. Sometimes some regulators, they discuss with us also. So this particular one, they looked at Murabaha also, I recall at that time, and they looked at Wakala. But since, their sort of regulator is not a, Islamic sort of jurisdiction, so naturally they developed this Wakala with certain conditions there. But yes, that is something which they have put together.
Ijlal, as we bring the podcast to a close shortly, one of the things you're also famous, well, IFM is famous for is Sukuk, writing about Sukuk standards or Sukuk trends and things like that. I mean, I haven't really been tracking the Sukuk market for the last year or two, day to day, but the first half of the year, there seems to be quite a bit of issuance. Obviously, we had the Donald Trump's tariffs, which rocked a lot of the markets in April. We had this geopolitical stuff going on in the region. We had oil prices.
Yes.
How would you characterize the first half of this year for the Sukuk market?
Yeah, of course, we are working on the Sukuk report. So that's last year was in November. So I see maybe this year also, before that or around that time, when we launch it through our webinar. But what I can say that, in terms of volumes, it could be less at the moment, what I see in 2025. But a lot more transactions could be. So transactions are more, but the volumes probably are less as of now for the first quarter 2025, what I sort of read and saw. But still, it's a market is progressing, so that's good. Some activity I saw last week also. Some activity took place. Islamic Development Bank has always been active. They have also do quite a bit. Saudi market is quite active. If you see this region, UAE also have done. Bahrain also have done. Some other Qatar. From the region also, Sukuk it's been there. But yes, I think compared to 24, rather 25 could be first half could be little less than last comparison. Having said that, we have 6 months to go, so it always can pick up and reach the same level. And we reached the overall what as of now our report will tell, but outstanding level we have reached around 1 trillion, so which was basically last year. I recall 2023 was around 830 or 40 billion outstanding. So 24 is reached crossed 1 trillion outstanding Sukuk. So 25 could have added another 70 to 80 billion as of now.
One thing I wanted to ask you is, with Donald Trump doing all of these things with the tariffs and the dollar and the gold prices have been really high over the past couple of months. Do you think like a lot of countries now are looking at, traditionally a lot of issuers, sovereign issuers would look at issuing in dollars, but now with this instability in the US Treasury market and the dollar itself, do you think like a lot of these issuers are now looking at their own local currency Sukuk market, or indeed say like another currency to issue their Sukuk?
Yeah, good question. I think generally what we have seen, like you mentioned earlier also, that you need to have short-term Sukuk. So domestic market issuance is important. What we have seen, even for Malaysia, the domestic market is very deep. So that you need to have. In terms of, issuance, dollar still dominate, which I think probably will sort of continue. But then, yes, there could be, we have seen some issuances in euro also coming into play. So, and I see, domestic issuances, I think now we have reached around 30 currencies. So including from Africa region also, at least 5-6 countries are issuing now. So yes, I think there is a, and it's good that you develop your domestic market. So that's important. And generally what we see even, is domestic issuance has always been more than the international. But what I can see is that probably there is improvement now in the international Sukuk issuances. International Sukuk, when I say, is dollar currency or hard currencies. We used to have, which was quite interesting, but I have not seen those for, last several years, is the issuance, let's say issuer is based in UAE, but issuing in yen or issuing in yuan Chinese or issuing in Malaysian ringgit. We have seen some issuers out of UAE also and some other which they used to issue in other currencies, not dollar. So those kind of issuances are quite interesting, but I have not seen those yet coming into play, but they were there, so maybe.
Yeah, I remember a few years ago, I don't know if you remember, but there was a lot of talk about the Formosa market for Sukuk.
Yeah, yeah,
in
Taiwan.
Taiwan. That didn't really take off as much as I thought it would. But Ijlal, one thing I wanted to ask you, it's a bit of a sensitive topic amongst a lot of people, especially standard setters like yourself, is, and I did mention this to Omar as well on our podcast, and I've talked to many Sharia scholars and many practitioners in the market, is this upcoming standard, Sharia Standard 62,
Mm-hmm.
which, everyone has their view on it, and there's been articles written about it, including mine. I guess from your perspective, what are your thoughts on this standard, and how impactful will it be on the market once it does come into force?
Yeah, my humble opinion, as I don't really sort of want to be critical about it, and it's all good what sort of been looked at, and it's understand still consultation is key. I mentioned earlier also how the market side will work, because from our perspective, from IIFM, when we did our Sukuk standard, even consultation some years ago, 8 years ago, we did say that there is, if need, we'll do a documentation for, asset-backed sukuk. So that is there. In my view, one has to sort of see, of course, there are practical challenges, as we know, are there also. Then you don't want to open the door of basically Sharia interpretation, what existing sukuk issuances are there. That has to be managed, and those are approved by eminent, scholars also with the view. What probably I see that one can probably sort of do in terms of approach, in my view. Again, it's my view. It's not from IFM or any. Is basically you try to develop it in a phase manner. So you bring it, you see how the market can work on it, what kind of investor also you have to see their sort of side also. Their sort of applicability, what kind of sort of, whether they have appetite for these kind of things or not. Because you don't want sort of something which in the industry is progressing, but you don't want to stop. And in my view, you think that they will come around. You develop it in a manner that it works for a longer period and for the benefit. So I would say that if it is approach is more sort of gradual and see and you develop it, because right now you don't have hardly any asset back or outstanding 1 trillion, as been said, in the reports. But we don't have how many? You don't have that. So you developed, and I have seen, in my earlier life, asset-backed books, asset-backed bonds, and all. So those were there. Somebody wants to look, asset-backed structure, which I recall some of the transactions at that time I did was RJR Nabisco, merger, and there used to be a burger chain which has issued out of New York asset-backed junk bond, Horn and Hardart. So these are interesting memories. So just have to see, how they function. So I think, in my view, these are some of the things which one has to see. It's a good thing.
Yeah, I agree. I think it goes to the heart of like what we've been talking for about nearly the last hour, and like what people have said to me as well is that there's a lot of forms of Islamic finance, but the substance is lacking. This standard, however it will come, it's still an exposure draft, as you mentioned, and also the other thing we should also mention is that it's enforcement by the relevant jurisdictions, how that's going to take place.
Sure.
So yeah, I think that's definitely one to watch out for. And I guess, Ijlal, the other thing I wanted to ask you was, there's been a lot of talk about tokenization of Sukuk and the use of tech in Sukuk. Do you see a role for these kind of new emerging technologies for Sukuk, for new issues?
Yeah, of course. Tokenization, we have seen some, even ILM, you mentioned they have done some in their case. So I think that's a very good development. What we can also see in terms of the smart contracts, which IFM has been looking at it. So these are sort of some element within the contract which can be automated, and that can also further enhance in terms of, the use of technology. I think these are absolutely good development, and they will definitely help. We have seen very smaller issue, Sukuk from Indonesia, even in also Turkey and other jurisdictions I've seen, which has use of blockchain technology in terms of issuance and all. So these are, I think, very positive development, and they have to be further developed, in my view.
Yeah, one other thing that came to my mind just now was also this idea of mid-market Sukuk issuers. So, like, you talk to private credit guys and they want to talk about financing these high-yield mid-market Sukuk that don't necessarily have the funds to, hire investment banks or get a rating from a rating agency. So I guess, like, also this mid-market, it could also serve the mid-market guys as well, right?
Yeah, of course. That's what I said. If you see me, even we last year also we covered in our Sukuk report. There were issues even from Turkey also, Indonesia, which were like $30,000-$40,000 only, very small issuances. So that can be done. So that's I think the advantage of technology. You bring it up with proper backing of regulatory backing. That is important. That how risk is covered, how the investor risk is covered, what kind of entity is, if it's microfinance, what sort of entity, how they're sort of being regulated. These are very important. So you don't allow anybody just come take the money and run away. That's naturally not something.
No, another thing I really want as well, from a personal perspective, is more fractionalized sukuk, where you can get in on the action. I don't see enough issuers going down, because it's weird to me. Like I was having coffee with a banker about a month ago in Dubai,
Yeah.
a DCM banker, and he said to me, like, you can buy crypto or CFDs or these really high risk products as a retail investor, but for sukuk you can't. You need at least $200,000 in most cases to buy sukuk. So I just wish like issuers would issue retail, or governments would issue retail sukuk, but I don't know like if that's possible.
Yeah, that's a very good. I can tell you my personal experience also. Of course, we have in Indonesia some retail sukuks. They're quite big. In Bahrain, government issues their short-term sukuk every 3 months, every month, based on salam or ijara basis. Those can be now purchased for even $1,000 or $1,000. And by even my wife, I encouraged her, so she purchased. And the bank like ABC Islamic, they offer this through central bank. So when the bid comes, they put the bid on behalf of the a small depositor to put the base. And there is in that case is always highly oversubscribed. So we have seen now in some cases these sort of avenue for a small depositor to basically benefit, or they want to invest rather than the pure deposits, which could be much lower rate. They can invest in Sukuk and a much smaller amount. So that's a very encouraging development. So we have seen this is happening, but I agree with you that we need to see a lot more of that.
Very true. And also, just for discretion, that Ijlal and I are not saying any financial advice on this. We're just giving our personal opinions in case anybody wants to hold us to that. But Ijlal, tell us any projects you may be working on, any upcoming projects you may be working on.
Yeah, from IIFM, we are working on at the moment syndication documentation. There's Ijara syndication, financing documentation, not project financing, and also Muraba, syndicated financing. So these are the two new. Then there could be some on the management side, which I think right time it will be announced. So we are sort of looking at the new standards. Syndication is moving forward, so they could be issued inshallah this year.
Amazing. And also the Sukuk report as well, right?
Yeah.
That'll be published in November.
Yes.
I'll link to the most recent one, and then I'll also link to the website as well, so people can have a look at that. But Ijlal, before we sign off, what's the best way to reach you?
Best way to reach me, like you or anybody else?
Well, like anybody who's interested in learning more about IIFM or about these kind of issues we've been talking about.
Yeah, just send an email on CE. That should reach me and also my team.
And are you active on social media? Are you active on like Twitter or any of these like platforms, or not really?
Like I said, my engagement and day-to-day activities, and I have some other sort of things which I look at do it. So I'm not really active player on the social media, but I just follow things and I try to see. But that's keep me quite busy. So I'm not really in that respect active, but I do follow and I do sort of.
That's great. I'll link your email and IIFM's website in the show notes. But Ijlal, this has really been a fantastic conversation, and I wish you all the best for the rest of 2025. And yeah, we'll catch up soon, hopefully, inshallah.
Inshallah. Thanks a lot. Thanks for having us.
Thank you. Wa alaikum salam.